Hi everybody, Tim Knight here, Sloop of Hope. Well, a moment of silence, I guess, as we remember. 3 years ago, the Dow was, on that Friday, had a low of 6469. Makes one wistful, doesn't it? I gotta stop living in 2008 and 2009, I recognize that, but let's just look back 3 years and just honor this day as a time when markets actually were allowed to act on their own, no longer. Of course, you know what's happened since then. We've been going through this. And thanks to QE1 and QE2 and the perpetually promised QE3, the market has just roared higher, doubling since that time. Yes, but so it goes. Such is the life of a trader. Anyway, I was reminiscing a bit also about the days of nice, clean patterns. I was remembering a couple favorites. One, of course, is the Russell. This beautiful pattern right here, which presaged the glorious collapse. And even cleaner than that, the utilities. Never has there been a cleaner head and shoulders pattern than this one. And since then, it's been going bleh, doing more and more nothing, if that's possible. So I had thought that recently we were about to enjoy another really wonderful clean pattern. We had one here, and that got busted up in January. And then we had a lamer version, but not a bad one here when this trend line was broken. Well, that's busted up now. So what we have right now is a big fat mess with a capital M. The range that this had been in, about that, was escaped nicely on March 2, but we're back in the thick of it again. So that's big fat mess number one. I will say that the ES is, let's make this a daily, it's a little more clean, is still hanging on to a very pretty broken wedge pattern. This ascending wedge was broken and we're approaching the underside of it, but hasn't wrecked that one yet. They'll give it a try next week. I will say that in the week upcoming, we have got to see some serious weakness, or else it's just proof yet again that falls like Tuesdays are just one-hit wonders, and that this market will never be permitted to fall again. It's strange because after 2008, 2009, I think the powers that be basically made a solemn vow that will never be allowed to happen again. And they will succeed at that until they can no longer succeed. And I mean that quite sincerely. This isn't me bitching. Until such time as the tools at their disposal, namely creating trillions of dollars out of thin air, until that stops working, they're just going to keep doing it. And who can blame them? I mean, if your impetus is to keep your friends rich, then you will keep doing what keeps them rich until it doesn't work anymore. And then they'll have to make shorting illegal or some other tool like that. And we've seen that happen too. I mean, that is not facetious. It happened in 2008 when short selling was, it was, you couldn't do it anymore. So it'll keep working till it doesn't. A little bit less controlled of a market is the monstrously large Forex market, and that actually did fall today. By today, I mean Friday. I'm recording this on Friday. And if we can break, well, the easy goal is to break the lows of the 6th. The little bit harder goal is to break the lows of the 15th, and the much harder goal is to break the lows of the 15th of January. But this pattern's still very much in place. Yes, we had some disturbing action above that trend line, but we're well below it now. And this is still an exciting pattern. And because of this pattern, EEM is actually my largest short position right now. It isn't huge. In fact, I don't have any big positions, but I've got a couple of medium-sized ones. This is one of them. Some other indexes that are still kind of holding their own in terms of not getting wrecked is our good friend the Gold Bugs Index, HUI. Well, you know, that the cleanest charts I think are the Euro, EEM, HUI, and of course GDX. Less clean, of course, are the general equity indexes. So I do have some longs, and some of them are doing rather well. I did a post on Herbalife. It's HLF. Old timer here, BAP, doing super. A breakout to a new lifetime high. CCI, another boring but steady performer. LEN, another lifetime high on that one. And our good friend Lululemon. Nice break above this very pretty basing pattern, and another keeper right there. I think real estate is also looking possibly bullish. ERE and DRN are both ETFs which are nicely configured, and crude oil continues to look strong, although let's remember that breakouts before have been crunched into oblivion. So if we're one long this, one would keep a very close eye on it. There have been some breakdowns besides things like GDX. J&K broke its ascending trend line, is staying neatly below it. And a real favorite of mine, as you know, is XME. This really demands an intraday chart, 60 days. We've got a very nice topping pattern here, which was fully retraced over the past couple of days, and we've already started to move beneath that. But as you look at a longer term chart on this, you can see really the nice potential this has for a solid run lower instead of just getting kind of nickels and dimes here and there. So anyway, just to wrap this up, this will be a deliberately short video. I am currently 75% committed, 25% in cash. Of that 75%, I've got a mere 15% in longs, 85% in shorts, and really kind of a little bit more in the wait and see mode. Had Friday been a nice tumble, I would have gotten much more aggressive because I've got dozens and dozens and dozens of shorts waiting in the wings, but it was not weak. And as I showed you with the Russell, the clearness of the breakdown has gotten murky, sadly. So we continue to wait and see. And if we break above this trend line here, you're going to hear a very frustrated Tim, and I'll just move more into longs at that point. But things will be a complete mess at that time. All right, try to enjoy your weekend, and I'll see you on Monday.